like I said, identifying why a trade's not good is as much of a skill as identifying a trade which is good and something you want to get into. All right. So I'm going to tell you why I'm not overly feeling all of the markets, where I'm not overly like, yeah, this looks great, that looks great. I'm looking for this, I'm looking for that. I'm not really at that space at the moment. The markets are looking a little bit, yeah, yeah, a little bit, not there, not fantastic. Okay. So if we start, for example, in our JER 30, all right, which is over here. If anything, JER 30 is looking the best, or some of these indices looking kind of the best, better than others, all right? But still nothing to write home about. So when we look at this chart, and I'm going to zoom all the way out. Now I've drawn some lines, and for the people at home, I'm like, oh, you guys using trend lines and I'm not using trend lines. I don't hit the button and take a seller or buyer because the market hits a line that I drew on my laptop at home. Okay, I am using these lines so that my eye can immediately see, and more importantly, when I start to zoom in, remember where I am in the range. This is a range, okay? It's a range of the market making this data point, okay, and this data point, and this data point. The market went from here to here to here. I drew a line from here. Let's give it some numbers. I'm not just going to say here. I'm going to give it some numbers, okay? 1, and we're going to make this background white. Over here we have 2, and over here we have 3. Okay, now I always draw a line from 1 to 3 and then balance it on top of 2. Let me say that again. I will draw a line from 1 to 3 and then balance it, an exact parallel line on top of 2. All right, so what does that mean? That means I drew this line here from 1 to 3 and extended it out. And then I took a parallel line by holding control on my Windows machine. I don't know what it is on Apple. Okay, you might have to phone somebody or give your blood or scan your eye or something like that. All right. And I just hold control and I drop a parallel line on top of 2. This is giving me a range, i.e., where the market has been trending within. All right. This is me saying that my night trainers are slowly but surely getting more expensive over time. Okay. Now you can take these ranges back as far as you want them to go. Yeah. However, they get less and less relevant. Not necessarily, in fact, let me not say that. But the point is, we're day traders. We're trying to get in and out of the market today. We're not trying to take a trade and then we're going to check on it in a year and a half. All right. So the reality is that yes, this is relevant right now. I'm on a day, yeah, chart, meaning for our newbies, okay, you know, we understand that these numbers up here are our time frames, okay, meaning that every single one of these candles can be changed to these different time frames. Right now you can see that I've got the letter D selected, which is 1 day in time, meaning every single one of these candles that we can see here, it's a bit small, okay, are 24 hours in time, the whole day. All right. So this you can see, even if this little range here, this white range that I've drawn, all right, is going all the way back here to November 2022. Okay. And you can see here from that white range that is sitting within a bigger range because the markets are like Russian dolls. All right. Let's go and have a look at what a Russian doll looks like for the people that don't know at home. Okay. Because there's some people here who's never seen, never played with a Russian doll. All right. Not the film. Okay. These things here are Russian dolls. Okay. And what the metaphor is that the markets are contained within a larger time frame, and that time frame is contained within a larger time frame, and that time frame is contained into a larger time frame, and so on and so forth. So this over here could be like, you know, the monthly, yeah, and then this could be the daily, Yeah, and this could be your 4 hour, and this could be your, you know, 15 minutes or 1 hour. Yeah, and this could be your 5 minute, and this could be your 3 minute, and this could be your 1 minute, or what, and this could be seconds. They're contained within each other. So this guy has to respect this guy. This is a bigger guy than this guy, and so on and so forth. So when we look at the charts, we understand this bigger range, this bigger narrative that's been going on since, you know, however long we want to go back. There's been a bigger narrative going on. There's that blue line. And that bigger narrative is just saying to me, these markets have been getting more and more expensive. Yeah, the JER 30, the DAX. And then within that narrative, yeah, you're going to get times when it was going down, times when it was going up, you know, within that bigger narrative. Either way, whether or not it was going up or it was going down, it's still over this bigger picture was overall bullish, going up. Look at the angle of the blue range. Even though here we was making a bit of a retracement, we were still within this range. And within that range right now, we're currently in an impulse, a bullish, impulsive movement from this here, number 3, yeah, moving up potentially to over here. I don't want to give them numbers because I've kind of numbered them wrong. It should be 0, 1, 2, 3, 4, 5. Okay. But I'm just, yeah, maybe I'll renumber them. Let's just renumber them to just make it a bit more accurate. Okay. Yeah, I'm just going to renumber them. Okay. And it's for a different reason. We're not going to go into now, but I'm just going to renumber them regardless. 0, 1, 2, and potentially over here 3. So therefore, is it possible that our next move is over here? Possibly. We're up in a premium at the moment. This area at the top of any trend, of any range, whether that range is bullish, bearish, or sideways, the top of that range is a premium. The top of that range is expensive. Yeah, let me explain that to the beginners. It does not matter, even if this market was bearish, like this. Yeah, even if this market was bearish, like this, coming down, the top of this range would be expensive. Now, how do I make you figure that out in your brain and understand what I'm saying in your mind? Forget about it being JER 30. Think about it as anything, as it was the market for pineapples. Even though pineapple's price has been falling, and you can see it falling over the years, over the last 10 years, pineapples have been getting cheaper. Well, surely when you get to the shop at this point in history, it's expensive, even though the price is going to be falling over the next however long, and the price has been falling. Yeah, this part of the market is expensive, opposed to you know, a few months later was going to buy some pineapples down here. Even though the price is falling, this would be cheap. It would be a lower price than it was a couple months ago. Yeah, and when it got back up here, even though this is a lower price than a year ago over here or 2 years ago over here, it would still be expensive on the basis that the price is falling within a range. A couple months later, the price could be down here. This is at the top of any range is a premium, and the bottom is a discount. And that's the same whether it's bullish and the market's going up, bearish, or even sideways. Okay. However, let me just keep using this chart as we're here. However, what we do understand is that at the either side of any range, there's something that we call liquidity building up. Because I am not the only person with the vision and the foresight and the blessings and the eyeballs to see that their market is trading within a range. And so what you find is that either side of any range, there can be liquidity. And liquidity could be people saying, oh yeah, it's not going to come out of this range here. It's going to be here. It's going to turn around. And before the market even gets there, they've already got their orders placing their trades like this. Yeah, we're going to sell from as soon as it gets to that blue line, we're going to sell. But by them doing that, they've placed their stop losses, yeah, an area whereby they said to the market, if the price gets over here, you can have my money, I'm tapping out. Their stop losses are sitting above that blue line. Yeah. And if enough people do that, retail traders or whatever, that creates a pool of liquidity. That's why on a smaller time frame, we wait until liquidity has been taken, until the market does this. Spikes into liquidity above a level, you know, and then starts doing what it needs to do. Yeah, we want to see liquidity of some sort being, and when that liquidity is taken, it gives us some sort of heads up to say, okay, now might be a good time to get into the trade. Because we understand liquidity is what fuels the markets. So even if this market could then continue trading and doing exactly what we thought it was going to do, but it just took some liquidity first, and it might not be like as prominent as this. There might just be a little spike pricking up over a high over here and taking the liquidity. All right, I've just scribbled it like that so we can see it. But the reality is that's what happens. Yeah, because this trading game is a zero-sum game whereby the markets are getting its fuel, it's taking the money of us. For somebody to win, someone else has to lose. Yeah, the game of life, unfortunately. Yeah, unfortunately, it seems as though that's how the game of life has been played. Yeah, I wouldn't say it be, but we have seen historically that we live a great life over here. We got mobile phones. We go and buy leather footballs so that brand new Nike football so that our sons and daughters can go and play in the park. Somewhere around the world, there were some little kids stitching that football together for what, 12 cents. We don't like to think about that. We just like to take our football and go and do what we're doing. Yeah. Somewhere around the world with our mobile phone, there's a mine of kids or people that are very poorly treated and paid, mining for little elements so that we can just go on Instagram all day long with our £1,500 or £2,500 mobile phones. Sad but true. You try not to think about it, or you don't think about it because you haven't really comprehended, but you think about it. This world, unfortunately, someone's winning and someone seems to be taking from someone else. I wish it wasn't like that. I wish it wasn't like that. Kind of what happens. The rich get richer, they say, whilst the poor get poorer. If I start putting up all my, prices on, rent on houses and stuff like that, then, I may, I'm saying for certain, but I may make more money. But if someone's struggling, they're going to be hurting. Okay? They're going to be hurting. So like I was saying, the markets at the moment, nothing looks great. If anything, we can look at this JER 30. And the reason why I say there's nothing looks great, look, this is the daily. Let me zoom down. I was playing with some other tool earlier, just trying to see how you draw it. It's just a pitchfork that splits things into 3 sections. Let me get rid of it. It's a bit ugly. All right. But we are coming into this premium area, this blue line, or we're in the premium. We're already in the premium because the premium is any range split into 3. All right. So can you see this blue range? If we were to split that blue range into 3, have a look. We'd have one in the middle, like this. And I'm going to bother drawing them all because I just can't be bothered. All right. But we'd have one in the middle like this. And then we'd have one up the top, which would be, the third, the top third, the premium third. And then we'd have a one at the bottom, which would be, the discount third. All right. Not very well drawn. Sort of kind of at a wrong angle anyway. Yeah. Kind of like this. So we are in the premium third, as in things are expensive. They're at the expensive side. They're not at the cheaper side. All right, they're at the more expensive side. But within this white range, and I'm going to change the color because we've already got a white range. So I'm going to change this to yellow. within that range, can you see of this market giving me this data point and this data point, 0 and 1, and then me taking a parallel line. Have a look if you don't believe it's parallel. And it isn't drawn amazingly. Like I said to you, this is why it's a little bit discretionary of, you know, how it's drawn. But let's imagine like this, me taking a parallel line, holding control, taking a parallel line and plonking it on the top here. Okay, plonking it on the top here. Look how the market respected it, and it was a level. All right, it was a level in here. So the market, as we can see here, is in that range, this yellow range. Whether I've drawn it correctly or not, whether we want to move this here a little bit, change the angle a little bit, it's subjective. It's just a, you know, it's just approximate to be able to show you what's going on. It's kind of in the middle of that range. Yeah, it's kind of in the middle of this energy here, which I don't love, you know? I don't love it in the middle. I want to see it in a premium or a discount. And it's kind of the case, the same old story across the board. Yeah, we go to our US 30. And at the moment, the US 30 is kind of fraffing about consolidating. The zoom all the way out. Okay, look, we zoomed all the way out. Have a look. We're on a daily. And can you see the little range? I've drawn a little yellow lines in between. Look, we're kind of in the middle of that range. And the middle of the range, I like to compare it to, who cares? Who cares if your Jordans are, you know, £160? They're normally £160. That's just the middle of the range average price. Like, who cares? I'm not gonna be, you know, running to go and buy a pair. Or I'm not going to be running to sell my 20 pairs that I've got in my boxes. Yeah, they're always at that price. Go to JD Sports for Foot Locker right now. That's the average price. I want to be running to get into a trade to buy this price if it's in a discount and it's very, very cheap, or running to sell them if all of a sudden they're £800 each. Now, what I would say is this: it's in the middle of this bigger range, but in a smaller range, which is this one I've drawn here, this blue one, okay, whether or not I've drawn the angle slightly off or not, we are in a discount of this smaller blue range, which may present us an opportunity on a smaller time frame. But I still don't like the fact in a bigger range we're here, but we can't do nothing about that. It might take us weeks or months to get down to a premium of the much bigger range or not. So we're going to take this one into play right now. We're going to look at the US 30. Now, the issue I have with it is on a daily time frame, it's given us nothing. We're not getting any outside candles. We're not getting anything. Look at the fraff. Look at this fraff the last few days. Just fraffing about. We're going up, we're going down, we're going up, we're going sideways. Who knows what we're doing? Yeah. However, you know, we are in this discounted area on this blue line. 'Cause remember, nothing is a line. Some people get carried away. Goes, oh look, it's broken the line. It's not a line. It's an area. What do I mean by that? I mean, if I said, Jermaine, listen, can you go and here's my money, here's my card. Yeah. I want you to buy me, you know, some of those, one of those Air Force ones, you know, buy me them when they're cheap, around about, I don't know. If they get to anywhere near £100, bro, buy me them. If Jermaine comes back without no trainers, because he says, bro, the trainers were £103, didn't quite get to £100, I didn't buy you. And we're like, what's he talking about, bro? It's £103. Why don't you just buy them? I mean, I said around £100. Yeah. So it's not a line. It's an area of discount. Yeah. And vice versa, when things get very, very expensive, I'm like, yeah, I'm going to sell these around £400, bro, because, bro, they're normally £100. If they get up to near £400, whoo, sell them. I'm not going to be standing there twiddling my thumbs because they're £397 and I don't want to, like, I don't understand that. That's a great price. I'm like, when they get around it, it's an area. So down here is an area. So that even reinforces the fact that there's an argument going on here between buyers and sellers in this discounted area. Because prior to that, the market was going brrrr. Prior to that, the market was going boom, 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 boom. But it was falling off a cliff. Red, 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 red. Look at those outside candles. Red, red, red. It was bearish, bearish, bearish since Christmas. Yeah? Or since December, the start of December. Just boom, 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 boom. Something's going on here. Yeah, something is going on here. We broke this level here, and now we haven't broken this swing low, and there is some kind of conversation happening here. But the point is that I don't know what it is. I don't know for certain. It hasn't shown its hand yet. Why hasn't it shown its hand yet? Because it made this low over here and then pushed up into this level here on a daily, not necessarily coming up here and breaking this little level of structure. On a smaller time, if I go to my 4 hour, I'm still not breaking this level of structure over here. Okay, still not breaking this level of structure. And ultimately, if you want to go to the market, is trading within this little gray box. And even within this gray box, it's got some other smaller little arguments happening with how the market's kind of trading kind of within here. Yeah, it's like it's not showing its hand. It's not easy for me to turn around and know what's happening. Yeah, so therefore what I can do is nothing. I can say I don't like this. I don't know what it's doing. It's indecision. I don't need to get involved. Remember, it's your hard-earned money. I don't need to just gamble whilst this market kind of works it out. I don't need to gamble. Yeah. Now, yes, I can still take opportunities here because I understand how the liquidity works on a smaller level. But in reality, I don't need to get involved. Look, I mean, when this market was doing this, look at how clean. Look at how clean December was in US 30. Look at that. Lower lows, lower highs, lower lows, lower highs, lower lows, lower highs, lower lows, lower. I know what it's doing. Well, I don't know. I can see what it's doing. It's even doing it, probably exactly making 50% retracements each time. Impulsing, retracing about 50%, 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 impulsing, retracing about 50%. And it did that for the whole of December. Impulsing, retracing 50%, bigger impulse just to get you going just before, Christmas, retracing about 50%, jump off a cliff impulse at Christmas. Look, coming here, 18th, boom, jumping off the cliff, retracing, making another lot. It was going for it. That whole stretch was a bit clearer for me to be like, guys, I'm in for the sell. I'm waiting for this because I want to sell this market because this market's been showing me what it's going to be doing. But since it came down here and put in this low, it said, okay, yeah, now we're going bullish, Jay. Okay, we started going up, boom, 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 boom. But we got to this level of structure over here and we're scared of it. We're not too sure if we want to bust above here. In fact, we actually came into a previous battlefield around about here, yeah, which is a previous London session. And we was like, yeah, we don't know if we want to go back up there, Jay. Let's go turn back around. Started going down here. All right. Started pushing down here and saying, yeah, we're going to go back down. But then it's like, I don't know if we really want to break this low, Jay. We just kind of like this area. It's warm and it's comfortable and we're happy just dancing around in this area. All right. Dancing around in this area. We're content with that. And that doesn't help me for the largest stuff. For the smaller stuff, yes, this range still presents an opportunity because we understand at the top of the range is a selling opportunity, at the bottom of the range is buying opportunities. And if we start making a smaller range, it's the same narrative. Yeah. But at the moment, look where we are. We're in the damn middle of that range. Or if you really wanted to go there, there's another little mess of a range happening in here. It's a mess. I don't know. I don't know what he wants to do. Right now, is it going to touch the top of this little extra blue box and then decide he wants to come down to the bottom of the blue box? I don't know. Does he want to go to the slightly bigger blue box up here first and then come back down? I don't know. Does he want to go all the way up to this bigger gray level where it's been in the past in the 27th of December and then decide it wants to come down? I don't know. Does it want to acknowledge that it's in a discount and decide that it wants to finally break out of all of this nonsense like this? Where's my line? Like this. And then come back down in here and then start doing this on the bigger picture. Have a look at the bigger picture. Yeah, I don't know. What I do know is right now, today, as I look at it, it's not turning me on that much. Not making me think to myself, oh, yes, I need to get into this trade. It's looking so great. It's looking so clean. No. Maybe if we break out of here and I start hearing my alert ringing, yeah, maybe I'll say, yeah, maybe something's happening. Okay. But at the moment, I am saying to you guys this, it is a skill, yeah, to be able to identify a bad trade that there's not really any opportunities presenting itself and you're going to stay out of the markets. Okay. We heard how, some of us, when we sit down at our machines, our hands are burning us to take a trade. Our hands are literally itching. Like when your palms, the mouse is going, click me, just click me. Who cares? Who cares if there's no opportunities? Just click me, get that hit, get that, oh, yeah. But I'm saying to you, once again, it is a skill to be able to understand when there is no opportunities. Someone's gonna say to you, well, how's the markets, how's the trading going? A bit slow at the moment. Waiting for a few things to happen before I, you know, spend my hard-earned, you know, cash, yeah, my kids' inheritance. Before I go there, I'm waiting for some things to happen because I'm telling you right now, this US 30, only thing it's got going for it is this smaller range, which is this blue range. We're in a discount of that. Things, negatives. Let me tell you the negatives about it. The negatives is we're sitting in the middle of a bigger range, which is this bigger yellow range. The negatives are right about now, at the moment, we're fraffing about, kind of consolidating, just going backwards and forwards. Wiki in one direction, wiki in the other direction. There's no breaks of structure. There's no confirmations. These are negatives. The negatives are outweighing the reasons for me to actually get into the trade and put in some work. So on that basis, I don't care if you only trade US 30. I don't care if you normally trade US 30. I don't care if the guy on Instagram says he's trading US 30. For me, I can't see the opportunity. I'm not that interested. Because I have the ability to go over here and click over here, or go through my pairs and click a myriad, a plethora of other Forex pairs that I can go and see if there's opportunities in. I don't need to force the matter. I don't need to go and take a trade that doesn't actually look like it's an opportunity. You wouldn't do that in any other walk of life. You wouldn't. Or you'd go and pick up the apple, and the apple, you pick it up, and on one side of the apple, it's all brown with a hole in it. It's looking mad. What? I mean, there's 100 apples. You picked up the one off the top, and you turned it round, and it was brown with a hole. What? You take that one home and eat that one? You say, oh yeah, that's. Let me take that one. You're not gonna do that. You're gonna say, ugh. You're gonna put that one back or throw it away, and you're gonna go and pick up another one and look to see if that looks like an apple you want to eat. It's the same principle. But when we get into trading, that goes out the window. We just start turning into brown, worm, holy, apple munching lunatics that we just need to click the button and get into some sort of trade right now. And then when that trade doesn't play out, and we don't make any money, or we blow our accounts, we start getting miserable. We start thinking to ourselves, oh, but we knew that that apple was rotten. And we took the trade anyway. I'm talking to somebody on the call, because somebody on the call has come in this market and been like, yeah, I'm not really too sure. Let me tell you something. When the market looks great, yeah, I'm looking at EJ at the moment. We might look at EJ, all right? I overlooked EJ. When the market looks tremendous, like it looks, the stars align, it's obvious. It's very clear. And you're like, bro, look where we are in the range. Bro, look at the structure just being broken. Bro, look at the strength and speed that we moved away from that area. Look at this. Look at that. Like the stars align quite clearly. And even then, let me say something to you what people don't get. Even when the stars align, you could still get stopped out and lose money. It's like life. You could do everything right and something still go wrong. That's why we manage our risk. That's why you don't go all in. Yeah. That's why I don't step out into the road with two of my kids, when that car was hurtling towards the orange the orange light, the yellow light at 100 miles per hour. I'm not going all in. I'll lose it all. He should be slowing down. Yeah. I did everything right. I looked left, I looked right, I looked left, I held my kid's hand and I stepped out into the road. But I'm not going all in with my kids. I'm waiting till that car comes to a stop. I want confirmation. I want to see the brake lights. I want to see everything stop to a halt. I even want to see some other people walk in front of me and go first. I ain't gonna lie. And then I'm gonna step out into the road with my kids. Because in life, you can do everything right and it still kicks you in the face. Yeah? So let's look at EJ. EJ on a much, much bigger picture since the start of, let's just say, going all the way back to 2005-6, has been trading within this range. This blue box. And we can see that the market has been bullish up into a premium, because I've just explained to you at the top of any range is a premium. And we have seen a reaction. Yeah, we have seen a reaction. Okay, the reaction we have seen is a bearish one. As the markets came up here, have a look. I'm on the weekly at the moment. Came up into here, boom, and then boom, had a reaction, breaking previous structure. This is a bearish energy. This is someone saying, yo, these Air Force Ones are £600 each. We are selling everything. Sell, sell, sell. And then we've seen the sellers out muscle the buyers, and we've seen a breaks in structure, significant because I'm on a weekly. And then we've seen a retracement. We've seen a lower low. We've seen a lower high. We haven't seen another lower low yet, but the market's still teetering around in here on the weekly. Let's drop to our daily. On our daily time frame, we can see that the market is within our bigger Russian doll. Yeah, this is our bigger Russian doll here. It's not great angle the way I've drawn it, but it's what it is. Yeah, this is our bigger Russian doll here of the market making a lower low, a lower high, and not quite a lower low, which is the concern, and push back up into here for whatever reason. Maybe it was for the reason of it's Christmas time. Look, December the 20th. This is all December, and the markets are doing something. Who knows? All right. And we're up against this premium at the moment. I don't like the fact that we didn't make a lower low here. That's the concern. Why didn't we make a lower low? Yeah. Why are we now coming back up here? It's because we actually want to start making higher highs and doing something else in 2025. That's the overall concern. Yeah. Now, from a outside candle perspective, I haven't really got no outside candle energy. Yeah. Yesterday's red candle wasn't necessarily a candle that closed outside the range of the previous candle. It actually closed equal or inside that candle, which is a bit of a concern. So I don't get that as some confluence. If anything, I start looking at, is this push down here? Was this just to close this imbalance that you see that I identified? And if that is the case, maybe the market wants to push up now. Maybe it's had enough of trading within this silly blue box. Yeah. And it wants to actually it wants to be free. It wants to be a bird and start coming up here. Yeah, maybe the euro, and then you can start combining fundamental reasons, not just the technicals, because maybe fundamentally there's some reasons why the euro is so strong against the Japanese yen, and maybe for 2025 it's going to get even worse for the Japanese yen, lose more strength, and that might be a fundamental factor. Might be, I don't know. We might have to talk to our resident fundamental specialist of maybe why 2025 is going to be the Japanese yen going down the drain even more against the euro. Maybe, or maybe it's the complete opposite, that maybe the Japanese yen are planning on strengthening their currency against, and that strength will outweigh the euro and allow this market to start trading back within that blue box again, coming back down here from a premium. That's how you're marrying up fundamental things that are going on, yeah, in that country with the currency, etc., with the technicals of we're up in a premium, and I don't know exactly what the market wants to do. All right, let's look at it on a smaller picture. Again, like I said to you, I haven't got that outside daily candle, so I'm not happy about that. And if we drop our time frame down to our 4 hour and start looking at the session information, bearing in mind this is euro against the Japanese yen, all right, we can have a look to see what this market was doing in the previous sessions. All right, so we can see here was the Asian session, okay, which was it's last night when most of us are sleeping. All right, this here, this red block here. I haven't got the text in there, otherwise my chart starts getting even madder. All right, and we can see that London started, and what happened with London? Can somebody talk it through to me? What happened in London session? Give me a synopsis. Give me a summary of what you can see here happen. I'll drop my time frame down to a 5. I'll put in some lines first to help. Here was a level of liquidity above the Asian session. It says liquidity here. We've also got liquidity here, which is the bottom end of the liquidity, because I told you guys at either side of any little range, and this was the Asian session range, a time when the session was going on, presents liquidity. All right. What's happened so far in London session? What's happened so far in London session, which is this yellow box? Do we know?
It looks like it's taken the Asian high,
Mm-hmm.
and it's moving towards taking the liquidity from the Asian low. It hasn't broken outside the range as yet. It's got close to it. It's taken a little retracement, and it could possibly take the Asian load and continue going bearish, because that's what the momentum is at the moment during the session. Yeah, that's where I'll leave it.
I think that's an excellent analysis. I'll give you an A. Yeah. Look, the market, I mean, we're just explaining what's happened. We're just reading these candles as we're supposed to be able to. Jason, very accurately, just read the candles. He just basically is just saying what happened. Well, what happened is in London session, look, from 7 a.m. this morning, London session, the markets was down here. The market pushed up. As soon as the London man started getting at the helm, started getting at the buttons, pushed up bullishly, making smaller, higher highs and higher lows on a 1 minute time frame. But when it got to this level of liquidity above the Asian session highs, it swept the Asian session high and actually gave us a beautiful entry that I missed out on. I wasn't even looking at it like that. Okay. You can see here a manipulation M pattern at the point where liquidity was swept. Here is our manipulation M for those of you who are like, where? Can't see it. Yeah, that's a manipulation M. Let's just quickly go over it for the people that don't understand what the word manipulation M means. This is McDevil's, where you get burgers that don't break down for 20 years and chips that don't break down and stuff that they call food that's not actually food. This is a McDonald's M. But a manipulation M is that right shoulder is higher than the left shoulder. Indicates a break in structure, indicates the market's pushing up, taking the last bit of liquidity above this high, and then moving, especially if they move away with strength and speed. And then what we wait for is that market to come and tap back in here into the middle of that M, or into the anywhere where we've seen the imbalance from that displacement. And we can either get an entry here, if we're wicked and bad, or we wait until the market closes back down below that level and we get an entry here. And as you can see here, if I get rid of all of those scribbles, oops, redo. As we can see here, the market made our manipulation M, and in that energy, have a look, it made some displacement. there was some imbalance. Have a look at the imbalance. This is the manipulation M here that I'm zooming in on. See it? See it? See it? Someone's saying, yes, I can see it, Jay. I can see it. I can see it. You're right. I can see the light.
Yeah, I
Okay.
see it, bro.
And then, yeah, you can see here and here, there is an imbalance. There is a displacement. I'm actually annoyed that I didn't get into this trade. I was too busy listening to my Rocky Balboa music. All right. We can see an imbalance in here. This is our kill zone of if we can take the trade here if we wanted to. It's lacking an additional confluence of the market of the candle closing down below. But if somebody told me that they hit the button here with their stop above this high here after liquidity was taken and we can see that the market is potentially going to go bearish, I wouldn't be upset. I would say good trade. And that here would be to this high, there's 6 pips. The spread on EJ, I don't know what it might be. If you decided to make your area 7 or 8 pips just to keep yourself safe. Because I think maybe the spread might be a pip. So spread times 2 might be 2 pips like this. I would not be upset. And from there, you'd be in the monies as the market swept liquidity from above because it's a thief and ran in the opposite direction towards opposite liquidity as Jason identified, which is over here, looking like a lovely 1 to 6.5 trade. What does that mean? That means I risked $100 or £100 or whatever it may be, and somebody came and brought me back $650. Sounds like a good transaction to me. Sounds like a transaction if you could repeat over and over and over again would probably make your bank account go in one direction. Yeah, that's what happened. Yeah, that is what happened, and that's how you could have got into the trade on a smaller time frame. The same way I'm down on my 1 minute time frame seeing this is the same way that you can look for it on a 5 minute or a 15 minute or an hour or a 4 hour or even a daily. It's just going to take you a lot longer to see a manipulation pattern like this. Look, I've just zoomed all the way out to my 4 hour. Have a look. I see these things straight away. I don't need to put it to my line chart. I can see with my eye. Yeah, but I can see straight away the exact same strategy here if I was sitting around waiting for 4 hour candles. Yeah, I can see how this market came up here. Look, without me doing my line chart, I can see it. The market made a manipulation M here, pushed away, and then came and tapped back in. Let me just do this so you can see what I'm talking about. And trust me, guys, I don't have the time to wake up in the morning and be like, I'm going to do this, and I'm going to show them EJ, and I'm going to show that, and here's one I made earlier. No, that's what the YouTubers do after they go and they upload their videos after the fact, trying to say that this, that, and the third. This is me just doing it live. There's a manipulation M-ish, yeah? This wick here gives us the manipulation, okay? Yeah? Gives us the manipulation. Remember, when you go to the line chart, it doesn't necessarily take into consideration wicks, it takes into consideration bodies. And then the market then, on our candles, created an imbalance, an inefficiency as it moved away and broke structure with strength and speed. Yeah, that's why there's a big old red candle there. No wicks crossing over. It moved away with strength and speed, broke past the structure with strength and speed. Yeah. And then the market at some point says, wait a minute, what about the unity strategy? What about the unity strategy to be free so that we can go and get some monies? Let's go back and correct and tap back into that imbalance. And on a smaller time frame for the people that's understood the strategy, in here, you look for the exact same thing so that you can get a smaller entry. And you could keep getting down smaller and smaller and smaller to increasing your risk as you go down smaller. Oh no, increasing your possibility of getting stopped out by volatility as you get smaller and smaller. But you could get a smaller entry. And after it's tapped in, this could have been your signal if you wasn't going to go and get any smaller and you're just happy with taking it in a 4 hour. As soon as it taps in, you could have been in. We just stop above the swing high. Yeah. And then the Lord himself would have taken your trade to profitability. Okay. Now, I'm not trying to turn around and say you should be sitting here and taking 4 hour trades. I personally don't think that as a day trader, you should be trying to look for entries on the 4 hours. No. Maybe if you're a swing trader, yeah. Or maybe if you're like, for example, let's imagine that I'm a big swing trader or I've got a massive account and I just don't mind trading one-to-ones. I don't know. Maybe my account is so big that this is 100 grand position. I'm gonna lose 100 grand, but I don't mind because I get all the confirmations in risking 100 grand to make 200, 1 to 2, to make 200 or to make 100. Maybe I'm happy when I'm 100 grand up after how many hours? Let's see how many hours. After 1 day and 4 hours. Maybe I'm happy holding my trade for a day and 4 hours and being 100 grand up. And I say, Bob's your uncle, Fanny's your aunt. I'll have that. But I'm just showing you it's the exact same strategy that we used on the 1 minute time frame and said that we could have got an entry somewhere over here. It's the same. Yeah, it's the same. It's no difference. Okay? It's no difference. It's powerful stuff, guys. I'm not gonna lie to you. Yeah, and it's really, just like anything, just like if you was learning how to play the piano and you started to now be able to just sit at the piano and maybe there's someone on here who plays the piano. Yeah. I play a little, all right, but I'm not gonna be in concert anytime soon. Okay. But when I see somebody who can just sit down at the piano and just do their thing, it must be quite a beautiful thing. Like someone goes to you and hums you a song. Like, can you play this? And you don't even really know the song, but you can work it out. And before you know it, you're playing the tune and you like this, yeah, boom, boom, boom. You're putting the chords in with it at the same time. You're doing a little riff over here with your right hand. That must be a beautiful thing to be able to read the candles, to be able to say, just like Jason just said, London session opened up. I identified the liquidity. Liquidity was taken. I saw the break in structure. I saw the market give displacement. I saw the market tap back into a zone. I saw a reaction. I took my trade. I know how to manage my risk. I know how to where I'm setting my target. Look at my targets. Look, whilst we're speaking, I know where my target was. My target was the liquidity over here, this side, the other side of the Asian session. Let me make it a blue line. And I tell you what, I've got other things to do, other investments to make, my job to go to, a park to go and sit in and twiddle my toes in, a daughter or granddaughter or grandson to play with. And I'm going to close my trade here, risking my $1,000 over here and making 6,500 over here. And I'm done for the day at 8:56 and 31 seconds. Thank you, JP. Thank you, markets. I'm done. I'm going to go live my life. I'm not even going to open my charts again for the rest of the day. That's the power of being able to trade these markets that are open and you can access them through your laptop, in your bedroom. Because what I have said is not unrealistic. Everything I made Jason tell me to move. He told me that London session, our power area, our kill zone within London session, when we're supposed to be trading. All right. That's another one for the people that are trading at all mad times. Yeah. London session, kill zone from 7 till around about 11. Yeah. 10, 11 is our kill zone. Within that kill zone, the market did all the things that we look for. The market took liquidity. The market made a manipulation pattern. The market corrected. The market continued. And I decided to take the trade. This is what I've been teaching you. And there's lots of other things we can add. Understanding market structure, price action, understanding volume, even being able to read the tape. I'm going to do a session on being able to read the tape. Yeah. Reading the tape is being able to identify where the volume of orders are sitting around what price points. Okay. around what price points are volume of orders sitting can assist you. Exponential moving average can assist you. Yeah, EMA, for the people that don't know what that is, exponential moving average, can assist you. But reading just the language of the candles is enough. It's like saying, you know, Money Mayweather should learn wrestling. Well, I mean, maybe he should learn wrestling if man take him to the ground. But him being the best boxer is enough. It's a great analogy for the people out here that are jumping from one strategy to another strategy. Oh yeah, ICT said this and some other man said that, but I'm doing the volume profile and then there's a, you know, the power of three of this happening here. And then, look, I get you, bro. You want to be international UFC mixed martial arts champion. You want to be the best in every discipline. But even the mixed martial arts man cannot stand up to purely a boxer who has said he is boxing and boxing only. Because mixed martial arts is boxing as well. That's why a Conor McGregor gets punched up by, a Floyd Mayweather. Because Floyd Mayweather's boxing only. Mixed martial arts man know a bit of everything. A bit of Kempo, a bit of wrestling, a bit of jiu-jitsu, a bit of boxing. So when they get into the octagon, they're able to do their thing. Fine. Just like if you take Money Mayweather into the octagon, what is he going to do when you put him on his back? He's going to cry like a baby. He's going to tap out. You don't know nothing about that. So do not believe that you have to be out here trying to learn every single clown's strategy, because nobody don't have the gold and the silver bullet. Understanding market structure, price action in the market moves towards liquidity, understanding how to decide of what trades you're going to take or not take is enough. Look at this trade, it's still going. It's a trade that everyone who understands the trade and has been here could have taken. And if you can take it once and you can see it once, you can see it again. And every single time, is it going to work? No. Sorry to burst your bubble. It's not going to work every single time. But let me ask you a question. What works every single time in life? There's certain times I pick up the remote control to change the channel, it don't work. I'm like, what the hell is going on here? What's happening? Oh, the batteries are dead. Okay, I need to go get new batteries. Oh, I don't have no batteries in the house. What am I going to do now? I've got to go and get up and go get batteries. And that's the remote control. So that's why we manage our risk, because we understand that sometimes it's not going to go our way. And if you really think about this trading thing, it is simple, but it is not easy. It is simple because what I'm telling you is what it is. But it's not easy because when you get in front of the charts, all other parallel universes start coming into your eyesight, and you start thinking to yourself, I don't know, I just think I'm gonna just risk 4% right now because I don't know. Okay. So that was this chart. Like I said, I didn't look at this how I should have. And I'm annoyed that I didn't see this little opportunity. But to be fair, I think I looked at it at 7 and I saw it in the middle of this Asian session range. And yeah. Now let's look at it on a bigger picture. Let's see. Now it's gone down and let's see what this market might be doing. What this market might be doing is not over with. It's not gone. Yeah, as in there might be other opportunities presented to us. Is that this market may, yeah, which is my get out of jail card, may be deciding that it wants to trade down within this range. That it's coming to the premium of this overall, this blue box here from the start of time the market's been trading within. As in that was a previous high, made a low, it's back up into that previous high, even pushed up a little bit above it. But now it wants to have a reaction from that premium area, okay? And maybe what it wants to do is it wants to trade down, yeah, from where we are here. I'm trying to show it to you. Let me hide that other indicator, which is very hard on the eye, which is this one here. Okay. Oops. Yeah, maybe it wants to start now. After pushing back up into this area, it wants to respect this premium line here. And right now it's just trying to turn the boat to start coming down here and trading down within our range, that white dotted range. Maybe. Yeah. But let me tell you something. I don't really care that much about what it's going to be doing over the next 2-3 weeks. I care more about what I just showed you guys of what is it doing right now, because I need my monies now. Right now, I need to know what's happening today. And what happened today is liquidity was swept, manipulation patterns were made, markets tapped into displacement. We either took the trade here as it tapped in, or even if we took the trade upon the close of that candle here with our stop above here. Because unfortunately that candle moved away rapid, so it opened up the distance a little bit. But even if we took it there, we'd still be in the monies. We'd still be here at a 1 to 3, 1 to 2.5, 1 to 3. But obviously if we took it here when that market tapped in, which will be fine, we're looking at a 1 to 8 trade. That's me giving you $100. You come back and say, yeah, here's your $800. Sounds good to me. How many of those days do you need a week? All right. This trade could very well run for a 1 to 10. And let me explain some other stuff to you guys. All right. Okay. This is a hard one. It's even hard for me to implement sometimes. Is that there has to be some rules of how you take your money. Because it's great in hindsight saying, oh, look how this market came down here. But there was a point when you was here, 1 to 3. At a 1 to 3, what have I told you that I'd like you guys to be doing? Somebody tell me. Somebody tell me. What would I like to be happening when
taking partials, grand rising, no?
Grand rising, my brother. Taking partials. And partials to me means that if, for example, you had 10 lots, you put on 10 lots on this trade. All right, let me just use a pen. You put on 10 lots on this trade. Let's just imagine you was risking 1%. Imagine this is your real account. So brother Alan, I know he's got it like that. He's got 100K live account of his real hard-earned money. Okay? Because he understands the strategy, because he's been trading, he's gone through the woes and pains. When he sold his house and he had a windfall of money and downsized into a smaller place, and he was sitting there with 300 grand profit, he took 100 grand, put it in the markets, and he understood his strategy that he's been practicing for many years, and he was willing to risk 1% at a time. Yep, he's here. When he takes this trade and risks 1,000 English pounds, which is 1%, for those of you whose maths are not great, okay, 1,000 pounds of his child's inheritance money, okay. When he takes a trade and that trade gets to 3,000 pounds in profit, because listen, I'm just saying, for example, it was a 10 lot trade, okay, as an example. I don't know if it was, but let's imagine it was. It was. In fact, let's do it. Let's do it all the way so that you can see how to calculate it in your calendar. Also, look, I'm giving you everything. Yeah, I'm giving them at home the source as well. Yeah, I'm giving them sauce upon sauce upon sauce. I'm making it saucy, all right? So, oops, let me get rid of this because we're not looking at GBP and ZD. All right, so if I pulled up this here from another screen to let you know, guys, yeah, I've always got it up. Yeah, it's always there. You guys think I'm just talking it. I have my calculator always there. What's going on? Oh, get rid of that. Yeah, I have my calculator always there. My cashback Forex calculator, yeah, for my position size, which is that here, that I'd put in here, what was it, EUR JPY, Euro JPY here, see, Euro Japanese yen, And then I'd put in here that I've got 100,000. Alan's got 100,000. That's his account balance. And the risk, he's going to risk 1% of that, which when I hit calculate is 1,000. Yeah? It's 1,000 pounds or dollars or whatever you want to say. All right, that's what he's going to risk. And in this particular trade here, have a look. If we take that one, we was taking that smaller entry from as soon as that market got into here to here, it's about 8 pips because it's less than that above this high. It's actually about 6 pips, 6.5. But he's adding his spread times 2 because Alan just doesn't want to lose his 1,000 pounds from some little volatility and then see this go to hell. And he's 1,000 pounds down, and when he's looks back at the chart, he could have been up 20 grand. He doesn't want that to happen, so he adds his spread times 2 above this swing high for 8 pips. Can you see it says 8 in here? I'm giving you guys a source. I'm showing you how to use the tool. It says 8 in here. He goes into EJ. He types in his stop loss. He clicks this link here because when it normally this page might open like this, showing the stop loss in price. He doesn't want that, so he hovers over here. He goes to stop loss in pips. And then he types in here 8. And then he hits calculate. And like magic, this says 19 lots, 0.721. And Alan knows that he always wants to be conservative. So he doesn't round this up to 20. Listen to me. He does not round this up to 20. I know he has the urge to. But he needs to stay underneath this number if things go bad. So I would advise you round this down to 19. He's already rounded up and given himself some cushion, making this 8 pips instead of 6 pips. I'd round this down to 19. Yeah, because also, by the time he does this calculation and goes back to the charts, it may have moved some more. So round it down, bro. Even if you round it down to 18, I'd say cool. Yeah, but let's just say for argument's sake, I'm going to say 18. You round it down to 18. I'm just going to say that, all right, for this example. So now he's got 18 lots. Going back to my scribbles, he's taken this trade at 18 lots, which is 1,000 pounds or $1,000. When he gets to 3,000 pounds up, risking 1%. So if you're risking 1%, by the time you get to 3 times that, that means you've made 3% on your account. 3,000 pounds off 100,000 would be 3%. What Alan does is he modifies his position by double clicking into where it says volume in his MetaTrader 5. And on your mobile device, there's a way you can do it as well. You should be able to modify it. All right, play with it. I think what you do on your mobile is the same. You hold it down and you can modify the lot size. Okay. So he's got 18 lots. So when he gets to this line here, can you see here where it's 1 to 3? You know what Alan does? Because he's smart. He actually thinks this trade is going to keep going, but he doesn't know. So what he does is he says, I'm going to modify my position and I'm going to put 9 lots of profit in my pocket. 9 lots of profit is half of 18 lots, and therefore it would be 1,500 pounds or dollars that he's now put in his pocket for his daughters. And then he has moved his stop loss to entry over here, make it a red line, a bright red line, so that he can now no longer lose. He's just taken 1,500 pounds and put it in his pocket. And now he's letting the trade ride because he actually believes it's going to keep going because it's just taking liquidity. Yeah, it's going to keep going. So he's now made 1.5%. He's bagged 1.5%. And then this trade continues to run all the way down here. So all the way down here. Look where we are right now. You might as well say we're at a 1 to 10. I'm stretching it just to make the numbers round. We might as well say we're at a 1 to 10. So that means he made 1.5% that he's already bagged. And then now that was a 1 to 3 where he bagged that. And now the market's gone in another 7. Yeah, which is another It's 1 to 7. So that's 7 now. He's already taken 1.5%, which is a 1 to 3. This has gone for a 1 to 10. Now, if he had just left it as the initial £1,000 trade, yes, it could be worth 10,000 to him. I get it. It could be worth 10,000 to him. But what he did is he took money off the table at 1 to 3, and now he had 9 lots. So from this point, so from here to here, he had 18 lots, and then he took 9 lots off the table, which is 1,500, and now he had an additional 7, yeah, running from here to here, an additional 7 R to R running from there, but it was only at 9 lots. Do you get what I'm saying? So it was only at him risking that kind of like, it's like he's halved his risk. He's halved the amount. Yeah. But 7 times half of 1,000, which is 500, is £3,500. So £3,500 plus the £1,500 means that this is a £5,000 trade for Alan. Yeah. And it was done in the most safe way, because in another universe, let me show you what happened. In another universe, this market came down here. Alan took his 1.5% and made it risk-free here, yeah, and took and put it to 9 lots instead of 18. And the market is this. In another universe, kick back on him, stopped him out. But you see, Alan, he just goes like this. I'm good, yo. I took 1,500. Yes, he was at £3,000, but he took 1,500, which is 1.5%. And 1.5%, if you could do 1.5% of trading once a couple times a week and your 100K account, you're going to be making 5 figures a month. You're going to be growing your 100K account by 5 figures a month if you could take 1.5% trades a couple times a week. A couple times a week means it's $3,000 a week. Yeah? Do you get what I'm saying? 4 weeks in a month. That's 12 grand. That's 12 grand of trades that didn't even do what it was supposed to do, and he got out of it early. But he took partials. Because when you're taking up, let me tell you what the emotions feel like. When you're taking the partials, what Alan is saying to himself, what the devil is saying, he say, bro, are you going to drop your 18 lots down to 9? This could be a 10 grand trade. That's what the devil's saying. And Alan says, you know what? You're right, bro. You're right. Nah, I'm not even doing that. Let me leave my stop up here. You are so right. And the market's going down here, 3 grand, 3.5 grand. And Alan's going. Alan goes to the toilet because of the excitement. And when he comes back, he sees the market spiked up like this and stopped him out for £1,000. Now Alan's kicking himself in the face with 2 feet, yeah, because he can remember 6 minutes ago, he was up £3,500 and now he's just lost £1,000. So now he doesn't even have £1,000 no more. Yeah. Alan now has 99,000 when he was just up 3.5 grand. Whereas when he takes his partials, that money is banked, it's in your pocket, and now the rest is on guard. This is how you trade, guys. Maybe with Alan was, he's really up. His account's up, and he's doubled his account, and now maybe he can start being a bit more like, you know what, I don't even care. Let me leave it. Maybe then, because he's just wild, wicked, and wild. But if you're not there and you haven't already bought a Lamborghini, already, sort up the trust fund for the kids, and already done certain things, don't be ramping with your paper. Take your money. Yeah, in any other scenario, you take the money. Any other questions, guys? Is there anything anyone wants to say today? Let's have a look at the economic calendar, see what's happening today.
Yeah, Grand Rising, today's
I was going to
fast
ask you something
payroll.
still.
All right, let's let Darren ask his question quickly, and then I will give us a synopsis. Go on then, bro.
Yeah, it was about yesterday and the liquidity pools, bro. I
Quickly, go on,
don't know
Scott.
whether you said anything about it before I came
Oh
online.
yeah,
But
in regards to identifying top quality liquidity pools.
Yeah, and where you should take it from. Do you go further back with the liquidity pools, or do you just get the one that's there beforehand? How far back do you look at the liquidity pools before you think,
All right, so
oh
I did
yeah,
kind of touch on that. All right, and
yeah,
remember what I said. It's about not all liquidity pools are identified by if you see multiple touches at a certain area.
hmm,
Yeah, because multiple touches at a certain area, people believe that rah, this area can't be broken, so they start putting that confidence in that area, and more money builds up, yeah, in that area. So if you see multiple touches in the area, there's it's an area that it's gonna be taken. Liquidity is there. If I saw a double top, a triple top, I'm like, listen, every time it goes up there, my heart's gonna be in my mouth because I know there's a lot of money in there. And also, if it's from an area where you saw a lot of strength and speed, because when you see a lot of strength and speed, that means there's a lot of sellers there. So the market stabs back in there. Those sellers are gonna be straight back up in there with their chest high, trying to slap the market back down. All right, we'll do more work on that next week. All right, because it is a good question, and it's something you could do. Like I said, you can go here into your charts and you can do some back testing. If I'm on an hour time frame here, and I can just say, you could just go back and say, where do I think are good areas of liquidity? It's quite straightforward. Do you know what I mean? Like when you're looking here, for argument's sake, look, this market came up here and had a reaction here. It pushed down, came here, pushed all the way down from here. There is going to be liquidity around this area. Yeah, because this is from here, this market was pushing down, and we even see that when it tapped back in there, some real aggressive pushing happens. So when it comes up here and it's taking liquidity, it's getting the strength to start doing something. Now, when it's pushing down, alternatively, we see this big move here with strength and speed pushing down from here. One may say that there is liquidity above these levels. Yeah. Now let's look at a place where we can see multiple touches. Yeah. If we see here, for argument's sake, there is consolidation happening in here, whoops, as the market touches. Here is taking the liquidity above these multiple touches, where people were like, yeah man, this is so strong, like, yeah, Bitcoin's never gonna go down from here. People start putting all of their stop losses here. The market says, oh yeah, you think so? Nam, 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 nam. Even makes our manipulation pattern and gives us a lovely entry if we missed it on a smaller time frame in here, for us to go brrr and take it down to the equal low. Yeah. Now, I said it's something that you have to keep looking at to be able to, and it must be in tune with the market structure of which direction the market's going in, etc. This was a premium over here. So when it come up here, there's a good reason for it to start coming down here. And it didn't even start going down straight away. It actually came down here and then started consolidating a bit, because on a bigger picture, it wants to do the same thing. It wants to consolidate for a little piece. Okay. So we'll do more on it. But let's say, for example, look at this here. From here, we've seen, boom, this massive push up from here. Strength and speed. I'm expecting to see some sort of reaction below this level. I'm expecting to see this market react below this level. Yeah, so this would be an area where there's liquidity sitting here of people that have seen that for themselves, yeah, but at the same time, it has to be in line with the market structure. And the market structure is ultimately bearish there, so I'm not expecting this to go to space, have a reaction that makes it goes all the way up here, but I'm expecting to see some sort of reaction, and that some sort of reaction could be 50 pips, could be 100 pips, could be 200 pips, enough for you to take action. All right, but we will do more on that. All right, we will definitely do some more on that. It's a good question. We'll do some more on that next week. All right.
Thanks, bro.
Yeah, love, man. Oh, hit us. Tell us what's going on.
Yeah, Grand Rising all. Yes, today's non-farm payroll. It's the first one of the year. It's supposed to be, well, normally it's the first Friday due to the Christmas period. It was moved on to this week. The market will be volatile. As you can see, the dollar is very, very strong. yeah, it's going to continue to be strong for the foreseeable future until the inauguration is on the 20th. That's when Trump becomes officially president. So we'll see what happens from there in regards to his tariffs and the noise that's coming out from there. A lot happening in the market. A lot of global geopolitics is going on. My advice to you, before you trade a pair, try and understand what's going on in the country. You can see there's a lot going on in the UK in regards to the pound getting battered at the moment due to the market really concerned if the government's got its figures correct. So yeah, my advice to you is definitely find out what's going on in the country before you trade the pair, so you've got an overall picture of what's happening. Regards to the yen, the yen, the situation with the yen at the moment is very, very well. It has been weak for a number of weeks. I believe there's a lot of central bank news coming end of January. I believe the Japanese will increase interest rates. That will strengthen the yen. But we'll have to wait and see what happens at the end of January, because there's a lot of central bank news coming at the end of January. But today, as I reiterate, is non-farm payroll. It will be volatile at 1:30. Yeah, it's going to be a roller coaster with old Trump getting in office the 20th of January. There's going to be a lot of whipsaws in the market because he talks too much. Any questions, anyone?
No, very, very good information. And whilst
So
I've been
what
talking,
did we say today was NFP or what?
Yeah, NFP, non-farm payroll, US non-farm payroll.
And that's what, when they're releasing new interest rates.
No, they're releasing payroll data. You've got two payroll data, right? You've got ADP, which is the private payroll data, yeah? So this monitors the private, how many jobs increased in the private sector.
Okay.
Non-farm payroll is the public sector. So how many jobs increased, yeah?
Okay.
So they're gonna see, but it is really important. They're obviously, if a economy's got more jobs, people are getting jobs, then the economy's good. If the economy's not and they're losing jobs,
that's the jobless claims. That when you see jobless claims and that's NFP, yeah.
No, jobless claims is another. That's another NFP's. Yeah, monthly employment. Yeah.
Okay.
Yeah.
Cool.
There's another one which is jobless claims, which is normally on a Thursday. I believe that was on Wednesday due to the funeral of the ex-president Carter. So there was no American market yesterday. So jobless claims was on Wednesday, but normally jobless claims is on Thursday.
Makes sense. Oh, I'm here. I'm listening.
Yeah, there's a lot to it, but you'll get it. But the ADP is the private jobs. That's normally before non-farm payroll. You can see it says ADP, so that makes it clear. But yeah, non-farm payroll is always volatile. There's a lot of volatility.
I'm gonna just play this here, which is speaks about what is the description of what non-farm payroll is. I'm gonna let them read out loud. Have a listen.
A monthly employment report produced on the first Friday of every month. Non-farm payrolls have a significant impact on the value of the US dollar, the bond market, and the stock market. As per the Bureau of Labor Statistics, the Current Employment Statistics, CES, program conducts surveys of approximately 141,000 businesses and government agencies, which represent approximately 486,000 individual worksites, in order to provide detailed industry data on employment, hours, and earnings of workers on non-farm payrolls. A higher than expected figure should be seen as positive, bullish, for the USD, while a lower than expected figure should be seen as negative, bearish, for the USD.
And that's their explanation of non-farm payroll on MyFX book. Great information to have. And, this is another reason why sometimes the markets look dead or dull or not like they decided, not they just, they're all over the place. Like I said, there's nothing really been grabbing me from a structural perspective because there are these events that are going to happen, and sometimes the market is waiting for that green flag before the ball starts to roll. Whilst Alan was talking, I was pulling up the JIXI, which is Japanese index, and like Alan says, you can see the Japanese strength of the Japanese yen is in the dirt over here. Okay, in the dirt. Probably it's close to the lowest it's ever, well, lowest it's been since 2008. It's
Jay,
in the, yep,
sorry to interrupt you. That it's Jay's absolutely right. Also, it's been like that for a number of months. Then it got strength. Then it's got weaker. They do intervene, the Japanese. Yeah, you can see these big wicks. Yeah, where they, especially on a daily or weekly or or on an hourly, they have done it in the past, and they what they hate is speculation on their currency, and that's why they intervene. And the reason I say it's really important, I interrupted Jay for that, is sometimes you're in that and it's wicking. If it goes your way, I think one time, Jay, you said it went your way and you got 5K.
yeah,
If it goes the other way, yeah, you're in trouble. They do that for their currency. They intervene in billions of yen, yeah. Watch out. You've got to keep an eye on what's going on sentimentally and watch out for the news because they do intervene on their currency. Sorry, Jay, go ahead.
no, that's great information. So the best thing I'd say, if you get into a Japanese pair trade, and especially when things are going on, unless your stop loss is miles away, 100 pips away, 50 pips away, take what you're given. So if you get in a trade, it goes your way, see a nice big spike up in your direction, boom, you're up, 1500, a grand, or maybe, move your stop loss up, man, and be grateful, because like Al says, they can introduce this volatility, and all of a sudden a wick for 30 pips in the opposite direction appears from nowhere, and you're scratching your head. Yeah, especially in times when interest rates are being discussed and the speculation, like Al said, is happening. So like I said, whilst he was talking, I did look at the JIXI, which is the Japanese index, which is purely showing the strength of the Japanese yen. And I also looked at the DIXI, which is the dollar index, showing exactly, backing up what Alan said, that it's very strong at the moment. Look at it here. We're actually broken out of a little bit of a consolidation block that we was in leading up to Christmas, actually broken outside of that. And this is all building up towards the Trump effect, in my opinion, this dollar strength. And look how we're here driving here, very strong, approaching strength of all-time highs seen in September 2022. Not approaching it, but on its way, yeah, in the direction of. Okay, so yep, everything Alan's saying is spot on. All right, guys, love and blessings and gratitude for you lot being here. Hopefully you've learned something. So for some of the new guys, we've got Jermaine in here this morning. I hope you've got even more of an insight. But what we're going to do right now is I'm going to play something in the live that's going to help us, give us some sort of education, understanding. Guys, have you seen the fires that are happening in America? I think we mentioned the other day, but I did do a little research into it. There's lots of conspiracy theorists and people that have saying that there are many reasons why this has happened, but it's pretty intense. The parts of LA, etc., are burning down. All right. What I'm going to play, we can. Sounds a bit boring. I was going to play something from Liz Truss. All right, but we're not gonna do that. I'm going to not play something that's trading related. I'm going to place a 21-minute video from them guys. For the people that are at home, like, share, subscribe. I'm going to lock off the live.